Hello and welcome to today's webcast brought to you by Compliance Week and Genpact. I'm Kyle Brasser with Compliance Week and I'll be your host. Today's webcast is Eliminate Payment Fraud and Corruption, the Power of AI and Compliance Expertise. Before we hear from our presenters, let me review the agenda. We're scheduled to go for 1 hour. After the presentation, we will have a question and answer session. Your questions will be kept confidential and anonymous, so please don't be shy. You can ask your questions at any time using the Ask a Question function on the left-hand side of your screen, and they can be asked to our presenters at the end of their presentation. After the Q&A, I'll wrap up the webcast. The webcast will also offer CPE credit for all attendees. Please disable your pop-up blockers in order to access the exam. To obtain your CPE credit, wait until the webcast is completely over and I sign off. At that point, the final examination will be presented automatically in a separate window. If you have trouble viewing the CPE test or receiving the CPE certificate, please send an email to webcast@complianceweek.com. I'll repeat these instructions at the end of the webcast, so if you missed anything, stay tuned. A few other administrative details. At any time during the presentation, listeners can download the slides from the drop-down menu on the left-hand side of your screen. There you will also find the feedback form for the webcast. We welcome your thoughts as we are always looking to improve your experience. If you wish to increase the slide size, you can also hit the View Slide Full Screen button at the top right of your screen. And lastly, a Help button is located in the upper right-hand corner of your screen for assistance. I'd like to welcome today's speakers. It is my pleasure to introduce Richard Massey, Head of Financial System Services and Compliance at Airbus Americas. Richard focuses his work on innovative solutions, transformation, and control and compliance for finance. We also have Anna Romberg. Anna is a co-founder of the Nordic Business Ethics Network and serves as Executive Vice President, Legal, Compliance, and Government at the global medtech company Getinge. Next we have Jill Rennie-Stillman. Jill is an Associate General Counsel at Genpact, where her responsibility areas include global oversight of legal and regulatory compliance. She has prior experience in private practice as a litigator. I'd also like to welcome Anu Vij. Anu leads digital regulatory compliance solutions at Genpact with a focus on anti-bribery and anti-corruption regulations, including the FCPA and the UK Bribery Act. She supports the T&E compliance transformation, third-party due diligence, and risk management solutions through automation and analytics to help organizations reduce costs and improve compliance. And finally, we have Subhashish Nath, who is a Senior Vice President at Genpact and leads their enterprise risk and compliance service line globally. He is responsible for driving growth and new digital solution development in the risk domain, including anti-corruption, enterprise risk management, third-party risk management, internal audit, and SOX. It's great to have you all with us, and with that, I will turn it over to Subhashish to get us started.
Thank you, Stephen. Good morning, good afternoon, and good evening, everyone, wherever you are. What a year we are experiencing indeed. I wasn't referring to COVID and its related inconveniences and uncertainties. I was referring to the fact that in the year of COVID, the Department of Justice in the US has indeed outdone itself with the highest ever resolutions closed in a single year, pegged at about $6.24 billion, which is more than twice of the second highest resolutions closed in a year, which previously stood at $2.9 billion. And by the way, that was in 2019. So clearly the US regulator has been relentless, and there are more regulators across UK, France, Brazil, and beyond who are not willing to be left behind. The ASAP 2020 report to the nations indicates that our organizations lose about 5% of revenue to fraud every year, with average loss per case being at about $1.5 million, and frauds typically last 14 months before being detected. Does that leave any iota of doubt on the need for companies to adopt AI and other available technologies to be leveraged by a team of compliance experts? Would some of this cost money, require company resources? Obviously, yes. Do companies have choice? The answer is a resounding no. So let's hear it from our outstanding set of panelists as they talk about how to address issues around corruption and fraud while bringing together compliance domain expertise and the latest in the world of technology. Thank you, Anna. Thank you, Jill. Thank you, Richard. Thank you, Anu. It's my privilege and an honor to be able to moderate such an esteemed panel, and I do sincerely appreciate all of you making time to share your experiences. The audience today should look forward to get some truly interesting perspectives as Richard shares his experiences of leveraging AI. Anna brings her experience of solving for problems of a company which got hit by one of the top 5 FCPA penalties globally till date. Jill brings a legal perspective on how companies should drive compliance, and Anu, her experience of advising multiple Fortune companies across industry verticals and continents. I would also like to thank Compliance Week for continuing to attract such awesome responses for each of Genpact's Compliance as a Service webinar series, even through the current phase of webinar fatigue. With that, Anna, if I could please start with you sharing your perspective on fraud and corruption exposure for organizations in the current context.
Yes, thank you, Subhashish. And hello, everybody on the line. I'm really excited to be here and share this hour together with you all on this very intriguing topic. And, when we elaborate upon fraud and corruption in today's environment, I think we are all very much aware of the challenges that we all are facing, in working from home on a societal level and what the pandemic has done on a global scale. But then as compliance professionals, we struggle with what this means for our organizations. What does it mean to have a distributed workforce that works remotely, where you don't have the same type of social control that you have when people go into the office? When you have people sitting isolated and doing their work, how can you really control? Do you have robust compliance systems that actually cater for this new risk? I think many of us during spring were scrambling and thinking, okay, how should we reinvent? What do we need to do? Is our program actually resilient in this new environment that we are in? I think many programs have counted on face-to-face interactions, going physically to sites, doing the monitoring visits and so on. And now all of that was taken away. And I frequently get asked, so what do you think? Do you think fraud and corruption will increase? And we surely will see that in a couple of years. The scandals we will have in 5 years' time, they are based on the decisions that are made here and now, today. But I do see some indications, and there are some research pointing towards the direction that fraud actually has increased. And we see that on many areas. There are the survey from the AFP that's showing, these payment frauds that become rampant. I think that's a new normal for many organizations. I just recently heard about a very interesting donations fraud that actually started smelling money laundering to me, where one party wanted to buy some goods and make a donations to a hospital, but then the payment was coming from a very suspicious party. So there are people that are taking advantage of this situation. So I'm really happy to elaborate on what we as organizations can do to build resilient processes and controls, because this is a new environment and we cannot rely on the physical human interaction anymore.
Thank you so much, Anna. Jill, what are you seeing in terms of repercussions, penalties that companies are having to deal with for not doing enough and in time from a compliance perspective?
Yes. Hi, everyone. So I think really the point that Anna made about, decisions being made now are really going to, be exposed a few years from now. And that's the case definitely with some of the larger and more significant cases that we've seen in the last year or two. They're based on conduct that may have started in the early 2000s, or, even I think some of them it's, 2010 or 2011, but, it takes some time for the conduct to be discovered and then the investigation to take place and all of that. So I did want to highlight a few of the major cases that have contributed to the record-breaking last 2 years in FCPA fines and penalties. So there are several cases that have involved failures in the kinds of controls that we're focused on today, governing payments for third parties and T&E reimbursements, for example. So I just wanted to describe a few of these, which may sound familiar from the news. So One of the most significant recent cases of this type was resolved in 2019, and that was the Ericsson bribery case, which required Ericsson to pay a penalty of more than $1 billion, and all of the accompanying, installation of an independent monitor, and all of that. So in that case, Ericsson was accused of engaging in bribes over a 16-year period through a wide variety of methods, including approval of sham invoices to conceal payments to consultants that were used to fund gifts, travel, and entertainment for Chinese government officials, and more. And I think, the fine there reflects, among other things, just the amount of time that this conduct was taking place. More recently, in 2020, there have been two significant ones that I just wanted to touch on. One is a medical equipment and medical care company called Fresenius, and they settled claims for about $231 million for instances of bribery across 17 different countries, spread across several continents: Africa, the Middle East, Europe, Asia, and South America. And the settlement documents in that matter call out insufficient resources and a lack of due diligence into third parties as significant contributing factors that allowed the bribes to be paid through a variety of methods, again, including payments to a government charity, gifts and travel expenses, and then the more old school cash bribes and kickbacks. Finally, another one worth mentioning is Novartis, which is a major pharmaceutical company, which paid a $346 million fine in June of 2020. The conduct in question there included improper payments in Greece, Vietnam, and South Korea to induce healthcare providers to, use Novartis products with their patients. And the improper conduct there sometimes took place through a distributor, but also by disguising some payments as honoraria payments. So there is, a wide variety of methods that companies need to have controls that could detect. And really, for me, it calls out that unless companies, have access to the data about, invoices to third parties and all of that, it's really hard to design effective controls that could capture all of these different methods of engaging in bribery.
Thank you so much, Jill. Anu, what are you seeing in the COVID and kind of post-COVID era from transaction trends for some of your customers?
Yeah. So, thanks, Abhishesh, and welcome everybody. Just to, take it from there, what we've been hearing very often from companies today is that, because of COVID, we have very limited travel and hence limited exposure to fraud and corruption. So why should we invest in technology upgradation, automation at this point of time? And I'd like to link it up with research done as recent as Q3 of this year in a Spend Insights report, which corroborates that travel has indeed gone down by 63% due to the lockdown imposed by the pandemic. However, what is interesting to note is that risk has surged with a forecast of 200% year-on-year increase in spend violations. And what we also picked up is that the fraud most likely to increase this year is through employee embezzlement, followed by usage of high-risk third parties, and financial statement fraud, falsifying invoices, sham contracts, approving duplicates, etc. Another interesting fact that we've picked up during our work is that the new work-from-home culture led to an increase in first-time spenders by 12% this year in comparison to previous years, notably because companies are allowing employees to pick up office furniture, etc., home furniture. However, we've also noticed that out-of-pocket submissions in this period surged by 80%. And this actually led to a high percentage of frauds in these submissions because employees have been using this expense to actually purchase television, sound systems, pay for TV services under the guise of home office furniture. And similarly, frauds through purchasing cards have also risen drastically, where non-compliances noted range from smartphone purchases and expensive personal dinners being routed through the P-card process. So basically, in essence, even during COVID, frauds have increased. New types and new ways of frauds have come up, and as compliance officers, we need to detect and prevent such non-compliances.
Thank you so much, Anu. That leads us to our first poll question of the day. Kyle, if I may request you at this time to please bring up the first poll question for the audience. While the poll question comes up, just want to share with everyone that we will be sending across the results by way of a blog and a white paper in about a month from now to all of the participants. So you need not try and take notes and screenshots of poll questions and results. So in which area do you perceive the highest fraud or corruption risk? We've already gotten a substantial number of responses. We'll just give it about 30 seconds more. I can see a reasonably spread response. Okay, so I think we've got the adequate representative response. Kyle, if you could send the poll results out to the audience. So if all of you are seeing the results now, clearly T&E and P-Card, marginal sort of leader in terms of area of exposure, followed very closely by accounts payable, supply chain, and procurement. I guess not too much of a surprise. So at this stage, Anna, if I could sort of request you for your reflections on the poll responses, and also your views on some of the fraud and corruption situations that you see organizations now dealing with.
Yeah, I think it's interesting to see that that's quite an equal distribution of the results because fraud. There are multiple. It can be different in different ways. Either manipulating just the financial results, but then if we talk about financial fraud and corruption, that money has to come from somewhere, right? And how do you get the funds out from the company? Anu had some examples of travel and expense reports and the payment cards, which is sort of an easy one, but then there can be more complicated frauds as well. And I think the results probably speaks a bit to that as well, that, okay, what type of fraud are we talking about here? But if I go into a couple of scenarios that I've seen, should I do that?
Yeah, absolutely. Please go ahead.
Yeah. So for example, I have a couple of favorite examples that are pretty recent, where you really see how fraudsters go about to get out the funds, because it is not so obvious that you book a corrupt payment or fraud like that in the records. And with all the tightening control and automation, it becomes harder and harder. And one case that I encountered was actually the usage of warranty provisions. So this was a big project, a construction project, where there were some warranty provisions, which is very natural. You provide for something that may or may not happen. And for a certain project manager, when his projects were finalized, there was this 1-year warranty. And after that, you release the provision if you don't need it. And usually, sometimes it goes over, sometimes it goes under. But for this particular project manager, he always hit the warranty provisions to 100%. So that being said, what happened was just before the warranty provision was going to be released, so there weren't any warranty work for a certain project. Some invoices came in from some suppliers, and those said warranty work. And this actually provided for a big fraud scheme that went on for years until the project manager actually was changed and another person came in and saw this odd pattern and also started to realize that the project that he had been involved with, there was this weird warranty work that was booked for those projects. And then it turned out that there were collusions with some subcontractors, and this additional part of the warranty provision actually was fraud. I have another scenario also which relates to sales reserves, where a local entity booked the sales reserves, which became a slush fund. They just took a little part of the sales and put in this, on this special account. And from that account, they were able then to pay out these fishy payments. So I think the balance sheet it's also important. So not only to look at the expenses and immediate payments, but also look at the balance sheet and what kind of fraud is flowing through the balance sheet.
Thank you so much, Anna. That's really interesting insight. Anu, you must be seeing a lot of these across multiple customers of yours. So could you kind of share some of your experiences?
Absolutely. As the audience indicated, what the poll results were that nearly 60% of the frauds have been routed or will be routed through the disbursement process. That's pretty much what we see as well, that majority of the frauds get routed through disbursements, be it accounts payable, wire transfers, travel and expense cards, or the P-card channel process. So I'll take you through a few common examples of, where we've seen frauds in the AP and the T&E P-card process. Starting with AP, the most common fraud is the duplicate scenario where, employees reimburse the same expense in multiple ways. Either the employee submits the expense as a card expense and then later on submits it as an out-of-pocket expense by submitting the expense across months to avoid detection. There is another scenario where multiple employees submit the same expense across reports. Or there are also interesting scenarios we've noted where the same expense is claimed across the procurement card and across the travel and entertainment spend, or across accounts payable and travel and entertainment, because employees know that audit technologies today focus on identifying duplicates within the same process and are not geared up towards auditing across all disbursement channels together. Another one is the split POs, which is a very common technique where multiple low dollar value POs get issued to the same vendor to circumvent approval limits. You have your kickback schemes, which Jill spoke about a while, which is another common way where employees falsify invoices, pay excessive amounts, pay commissions, issue sham contracts for work or services not performed, and they have been used multiple times in the past as well to route bribes. The next one that I would want to highlight is flip-flop of bank accounts. Now, most companies mandate sufficient controls at the time of onboarding third parties or customers, but changes in these vendor accounts or customer accounts get approved with basic checks without running scans across all vendor and employee accounts to identify usage of that account before. We'll contrast that very soon with what a machine can do, because the machine never forgets any changes made in bank accounts or any other history. Similarly, moving on to travel and expense and procurement cards, they've also been used historically to route frauds in multiple ways, like personal expenses being routed through T&E. This has definitely increased substantially with COVID, as highlighted above, because we've seen an increase in purchase of televisions, smartphones by employees using T&E cards or P cards. Repeated entertainment spend. There have been multiple cases noted in the past where frequent hospitality expenses have been routed with the same third party, but all of them were within threshold limits, and hence the manual review will definitely not pick them up as a red flag, and they'll get missed out. There are also cases of unauthorized, unallowable spends where employees, categorize expenses as meals, etc., for an allowable amount, which definitely will be passed off unless and until you don't go ahead and do a review of all the underlying receipts at a line item level, which becomes very time consuming, costly if it's done manually. And another big one, which is of real focus to organizations, is incorrect reporting of interaction with external parties. It could be political, government officials, healthcare professionals. And what typically is done in this scenario is employees go ahead and incur expenses with government officials, but do not categorize them in the right category, attendee type, and hence they go undetected. So these are some of the common fraud scenarios we've seen across all disbursements, the work that we've been doing so far.
Thank you so much, Anu. So now that one has heard of the increasing fraud and corruption instances, let's hear from the audience on how are their organizations monitoring, detecting, or trying to prevent such situations. Kyle, if we can get our second poll question of the day out to the participants, please. So second poll question's out. What practices has your organization put in place to monitor disbursements in AP and T&E? You've got 4 options. You're not doing anything about it. You've got manual reviews. You've set up some rule-based analytics, and you already started using or effectively using artificial intelligence. We'll give it a little bit more time. You're waiting for some more responses. Okay. So at this stage, I think we've got the necessary number of responses. Kyle, if you could get the results out to the audience, please. Thankfully, hardly few are doing nothing. Largely manual reviews and rule-based analytics, but we do see some amount of AI adoption seems to have started. So Richard, if I may at this stage request you for your reflections on what you saw in the poll results and your experience in leveraging AI and digital technologies to prevent and detect fraud.
Hi everyone, thank you very much for your time today. So basically, in Airbus, what we put in place, in fact, happened already a couple of years ago. We started to work on those different topics, mainly on the account payable side first, and then we also started to expand that to our travel and expense activities. And so on the account payable side, basically we put in place a dedicated module, in fact an in-house module that we added to our ERP system to make sure that we would be able to track correctly the management of all our invoices. In addition of that, of course, we put in place some additional controls to make sure that we can prevent, before even receiving the invoice, we can prevent any activities that could potentially have a risk for the company. So those workflows, of course, are related to segregation of duty, making sure that the allocation of access rights are limited to different teams that have the mandate to manage those different activities. But of course, these are kind of standard activities that most of the mid-size or even small size or big corporations have in place. So we decided to add, in fact, 3 years ago, this artificial intelligence layer, starting with our T&E activity, and basically this additional layer created a different way of seeing how to detect and prevent fraud. We in fact started to have extremely interesting results related to that. And we basically changed some of our processes. We started to change also or adapt our travel policy related to that. And in fact, that's where you start seeing interesting things popping up, is that based on standard processes, the way you activate new technology requires to realign your processes inside the company. And in fact, when you start mixing artificial intelligence, optical recognition, when you start also managing machine learning, when you also allow with this type of new technology, kind of neutralizing the language barrier, that is can also be a very important element that you have to take into consideration. You start getting, in fact, very powerful results on preventing fraud or detecting fraud and avoiding corruption. So, because in fact, those artificial intelligence systems are capable of getting into database throughout the world, like Yelp or any others, and basically by capturing this very key information, it basically pushes the boundaries of detection beyond what was possible a couple of years ago.
Okay, so Richard, you also we had some examples that we had in terms of how specifically you've used digital technology. Do you want us to want to talk the audience to some of these?
So definitely, we have several examples. I'm going to capture probably 2 examples that are kind of key, and where they were already kind of mentioned by Anu earlier. First of all, it's of course the creation of fake receipts. This is something that can be extremely difficult to detect due to the fact that in some cases employees, we don't have that many, fortunately enough, but employees, they tend to recreate the receipt in a way that it's very difficult to detect, as well as they of course submit the receipt in a way or on a timeline that doesn't allow a human being, doesn't allow this human being to detect that fake receipt probably submitted 5-6 months later than the initial one. Or sometimes they even submit a fake receipt at the time of the initial submission, and then they provide the real receipt afterward, using a different type of expense or different type of payment method on the system, even though the payment method is kind of unique. But they try to really trick as much as possible any manual review, and that's where, in fact, artificial intelligence, OCR detection, and so on are key, because they can detect that, and they can detect duplicate. They can detect duplicate among different periods. They can detect duplicate within the same travel expense. They can detect duplicate between different expense reports, between employees. I mean, you have all those different features and capabilities that today are offered through artificial intelligence, and definitely we use Absent for that, and Absent is definitely our key support on that. Today it's extremely difficult for an employee to go through and not being detected. So the fake receipt is one example. The second one is duplicate. I already mentioned that. Those duplication are today extremely easy to spot, and we don't have almost any more this type of issue in Airbus.
Thank you so much, Richard. Anu, you must be doing this for many of your clients. Would you like to add a few of those examples? Absolutely.
So, for those of you who can see the screen, I'll take you through 2 very interesting examples and showcase that, while I saw that majority of the audience, nearly 80% of you have said that either you're using a manual technique or manual review or rule-based analytics. So what I'll show you is, how a combination of AI with compliance domain is actually going to help you identify, issues that will definitely get undetected by just a 100% manual review. So the first example that I have on the screen is, or I'll just talk it out as well, is this is a submission by an employee. It's a pretty low dollar value. It's a $41 submission by an employee with an $8 gratuity, totaling about USD 49. The employee classified this as a meal expense, which is well within the company limit of $60 per meal. Now, typically, a rule-based technique as well as a manual review will pass such an expense. However, when we combine this with the OCR, optical character reading technology, that's going to scan the underlying receipt behind the submission, pick up the vendor name, and combined with data augmentation, this vendor name will be scanned through the internet to identify whether such a vendor exists and what are the type of services it offers. It will get highlighted that the vendor is actually an adult entertainment provider, Time and Lounge, which is definitely a non-allowable expense as per many company policies. Another red flag that we would note here is that the expense was classified and categorized by the employee under meals. However, when you do a MCC, a merchant category check description for the vendor, we'll realize that A, it's not related to food and beverage. In fact, this MCC is rated as high risk as per the MCC database, as this vendor provides adult entertainment. So those are a couple of red flags which the human review or a rule-based review would have passed off. I'll move on to the second example that I have here today. So what's happening here is that the employee, in this case, the employee is getting an expense reimbursed for entertainment. As you can see, the employee has selected attendee type as the expense submission tool as a business guest. The total expense is for $125 for 4 attendees and the employee, which is a total of 5 attendees, which comes to about $25 per attendee, which again is within the per person allowable limits. Hence, a manual review or a rule-based review would typically approve this expense. However, when we now combine OCR with AI, we will be able to extract the attendee business guest name, search them on online public databases, and will be able to identify any non-compliances. Like, for example, in this case, an attendee could actually be a government official, or an attendee could be part of a sanctions list, a healthcare official, and so on. So without AI, these misclassifications typically might have not got identified, leading to non-compliances with sanctions, bribery regulations. And this also is very relevant in the healthcare sector, where compliance to Sunshine Act requires adequate disclosure of interaction with HCP, HCOs, healthcare professionals, organizations, and the spends made. So again, some examples of how the power of AI coupled with domain expertise will bring a lot of frauds to light for companies.
Thank you so much, Anu. Anna, the world has often thought technology would solve for all things that human beings can't, and yet that's not happened. What's been your experience of compliance expertise leveraging digital technologies versus digital technology replacing compliance expertise?
Yeah, I love that question because fraud and corruption always involves a human being, right? So well, maybe in the future we will have a seminar on frauds conducted by the machines between themselves, but at least at the moment in our business environments, there is always a human being behind the fraud. So I think we cannot omit to work with leadership and culture and think that the machines will solve the issue. The machines and artificial intelligence is great when it comes to detection, but we have to be mindful of that we need to work with the culture to avoid these instances in the first place. And then secondly, there is always the challenge, and now we've seen some excellent examples, and I'm really excited to hear about the preventive use of technology at Airbus, but there can also be a risk to just get a flood of red flags, and how do you deal with all the data that you get as well? So yeah, technology is great, but I do still think we need human beings as well, especially to work on leadership and cultural issues.
Thank you. Anna, Jill, some of your views on this?
Yeah, absolutely. I mean, I think Anna really hit on it. And the way that we, one of the ways we assess our compliance program is by reference to the updated DOJ guidance for corporate compliance programs. And the most recent updates, to those guidelines, that framework really emphasizes that, any one method is not enough, basically. So one focus is on, that compliance and controls employees need to have appropriate experience and qualifications. There is that human element of, reviewing red flags and, applying that judgment. But it can go hand in hand with the kind of, AI and other digital tools that we're discussing. And that comes through in the DOJ's emphasis that companies need to provide adequate resources, both to sufficiently staff a capable compliance function, but also to give it, the necessary tools to focus on the kinds of data and sources of information that we've been discussing today. And the emphasis on data is really sort of a new angle that came through more clearly in the latest updates to the DOJ guidance. And they say specifically that compliance and controls teams must have real and meaningful access to relevant sources of data in a timely way so that they can effectively monitor and test policies, controls, and transactions. And then, one part of the guidance also touches on what we were discussing about, can you just give this over to the machines? And no. So essentially, if parts of the compliance function are outsourced, companies must still provide, adequate oversight of any third party, and also, ensure that data flows are adequate. So there's no sort of set it and forget it thing that companies can do with compliance. And really, companies can't focus or can't rely on a single mode of monitoring or indirect or after the fact means of testing. And the DOJ has really, gotten a lot more specific this year in the kinds of resources and data monitoring that companies need to implement.
Thank you so much, Jill and Anna. Quickly moving to a last poll question of the day. Kyle, if we can get our third poll question out to the participants, please. We'll give it a few more seconds. If I can just request all of you to send in responses. We've got comparatively less than the first two responses. I know it's a little bit more complex. Okay. We'll end the survey, and if you can send the results to the audience. Interesting results indeed. It looks like all of the above is the most overwhelming response, which just kind of suggests that companies indeed have enough and more to deal with. Richard, building on the poll responses, what's been your experience and view about companies building centers of excellence to better manage compliance requirements at a global scale?
Thank you for that question. Basically, when it comes to compliance, there is no 100 ways of managing compliance. There's only one way, and this is exactly what organizations have to put in place: a clear guidelines for their employees and for all the activities and processes. And of course, in this case, centralizing and making sure that you have center of excellences are key to manage those processes and decentralization. At the same time, those center of excellence proved that they create a substantial reduction of cost in organization, as well as I just said, increasing management or monitoring of compliance. So this is the key element that is definitely necessary to address compliance, fraud, and as well reduction of cost. And we definitely started this journey on our travel and expense activity. Europe also started that journey on the account payable side and is expanding that throughout the organization. Systems need to be aligned as well, of course, and this is key for that. So and the standardization, once again, as I said, and from compliance, you have one way of doing it, which means that all processes have to be aligned within the organization.
Okay, thank you so much, Richard. Anu, you are doing this for some of your customers. Are you seeing the traction improve more in recent times towards embracing centers of excellence?
Absolutely. I think I'll just highlight the challenges and then come to, what I'm seeing in the markets and, basis what my companies and the work that we're doing for companies today. So just in addition to what Richard said, the typical challenges that companies are facing is that budgets in general are reducing, along with the challenges that we spoke about in the surveys with respect to non-availability of teams and geographies, lack of desired skill set, infrastructure, decentralized process, disparate data sources. And, with the entire pandemic and COVID, we've seen that, companies were definitely receptive, but the level of receptiveness to, pick up everything under a center of excellence to ensure that we are bringing everything together in terms of running analytics on the entire T&E across, and extending it across the disbursement channel is definitely increasing. And why are we seeing this change? Companies want to reduce this duplication and business unit silos within their organization by integrating the service functions into one single department, ensuring that knowledge generated throughout the service delivery is benefiting the organization as a whole. So harmonization initiatives are definitely on the rise, and we hear all companies saying, we want to harmonize our processes across geographies, across regions. The other big factor that companies are looking for is a cross-trained resource with a broader skill set to support across the requirements. And why this is important is that this is becoming very relevant as a key learning in FCPA enforcement as well, because the bribes are never given in isolation. They've always been coupled with money laundering charges, trade sanctions, violations to the False Claims Act, wire frauds, and many more, in addition to the FCPA. And hence, companies want that the compliance team should adopt a 360-degree approach about the entire regulatory surroundings. Another aspect which gets a lot of weightage is automation opportunities. With one central team, it becomes much easier to implement automation ideas like implementing audit analytics software, bringing in OCR capabilities, VAT detection modules, which are very relevant in Europe. Flexibility. That's another important aspect. And again, in light of COVID, this is very important because the COE model gives you the flexibility to deal with peaks and troughs more effectively as compared to a traditional headcount model. For example, in these times, what companies are doing is, because of lower volumes, are shrinking COEs and, will ramp up when travel surges so that, they're able to manage the peaks and troughs appropriately. And lastly, I think, which is really important, is also enhanced reporting and visibility. When one team is managing the entire process, it allows that team to create integrated dashboards of spends, of non-compliances across the globe, and this allows for real-time visibility and allows timely action to be taken by the management. So companies are embracing the COA concept more and more because, the benefits are definitely weighing in and making them realize that, they should go in for this because it brings in a lot of advantages and is cost neutral compared to the traditional scenario as well.
Thank you so much, Anu. Before we get to some Q&A, Richard, did you want to sort of talk about some of the benefits of technology augmented with compliance domain expertise?
Yeah, definitely. I think it's very important that we can give some key figures here. So basically, first of all, the enhanced coverage is very important for big corporation. I mean, today we know that there's no borders anymore. People, they travel not that much anymore, unfortunately for Boeing and us. But we have, a lot of our employees traveling all over the world, which means that we need to make sure we can analyze each and every expense report with multi-language. I mentioned that a bit earlier. So the enhanced coverage of the AI gives us this opportunity to analyze each and every expense report, and this is key. Adding to the human element of experts looking at each and every expense report that are blocked for manual review, and they're going to provide by managing the expense report, they're going to provide insight to the system to help the machine learning improving the value and the quality of the review for the next ones. So this is extremely key. Now, if we talk about possible savings and reduced costs, this is also extremely key. In Airbus, when we activated basically our artificial intelligence system, we basically increased automation in a couple of months from 14% at the day of the activation to approximately 60%. We also started a journey of reanalyzing our processes, and we aim at having 85% automation in the future. And when we talk about reduction of effort, which is key as well in the company, we had a drop of reduction of effort of approximately 10 times. And those figures are accurate, so it's tremendous. So artificial intelligence really helps saving money and reducing your internal costs for processing those activities.
Thank you so much, Richard. And just before we sort of hand this over to Kyle for some of the questions that we've got in, I just want to talk about something that we've experienced benefit from, which is what we call behavioral science patterns. I think use of technology today really is allowing companies to figure out trends and patterns in spends, be it through AP, be it through accounting adjustments, be it on T&E, which no form of manual auditing would have ever picked up. And I think there are enough instances that we're starting to see where these trends and patterns actually are pointers both towards frauds, as well as, in certain cases, instances of bribes that we've picked up, which are just coming out of certain patterns. So clearly there is, as we've heard all the panelists say, technology is something which I guess we don't have an option but to embrace it. With that, Kyle, over to you for some of the audience questions, please.
All right, thank you, Subhashish. Once again, to our audience, if you would like a copy of the slides that were just presented, you can download them from the drop-down menu on the bottom left-hand side of your screen. Let's move on to the Q&A part of our session now, and I'll read these questions from the audience in no particular order. This first question I will direct toward Anna. Does low T&E spend mean lower regulatory or fraud risk exposure, given that there is minimal travel?
So that's a great question, and I wish the answer would be yes, but I guess no, it will not. It will, of course, reduce one possibility to have these duplicate receipts and these type of fraud schemes. But no, I do not think so. The pressure on the business to sell and to get the deals have not been higher. So yes, yes, it's a no. It will not reduce.
All right, thank you, Anna. And we'll move on to the next question here. And this one I will direct toward Anu. Can we implement an analytic solution with disparate T&E systems, multiple geographies, and unstructured T&E program?
Thanks. Absolutely. The answer is, more and more organizations that we're working with don't fit into this traditional mold of, we have one T&E system, we are present in one geography, et cetera, et cetera. With mergers and acquisitions becoming the new norm, with companies, ensuring that, with the acquisition, they bring in the legacy platforms that the companies have been using, with presence in emerging markets, et cetera. This is definitely the new normal where, we see a mix of geographies, systems everywhere. The system of engagement concept is really helping us, where the analytics platform that we've built is, essentially going to work through any disparate system. It has the capabilities of OCRs to ensure that the receipts are read. It has the language neutralization capabilities to ensure that, the receipts across languages can be translated, neutralized, and hence analytics could be run on them. So the short and simple answer is absolutely the analytics will run and is running successfully in disparate platforms, across geographies, across decentralized processes.
All right, thank you, Anu. And I'll move on to the next question here, which I will direct toward Richard. Does adoption of digital technology mean that our employees will require high investment of time to implement the tool and manage exceptions generated?
I think that was one of our main surprise when we did that. Strangely enough, those new applications are not that difficult, in fact, to implement. The most difficult part, in fact, is to make sure that the internal processes are clear enough to be digested by the system. And this is one of the key elements that we basically started to work on as well in August when we launched that journey. To make sure that when you create rules, those rules are kind of very, very clear to be able to implement them.
All right, thank you, Richard. And we have time for one more question, which I will direct towards Subhashish. What would be a key function of human being in controlling and verifying the work result of AI?
Thank you, Kyle. A great question. I think this is pretty much what we heard Anna talk about, which is technology can only do that much. It's about the human being which has the actual ability to interpret what those results are. It's the understanding that a payment to a university may have a government connection. The fact that airlines have government connections and therefore payment to any sort of airline-related business could be of exposure. Those are things that you can teach AI up to a point, but you can't take away the fact that human beings know what to look for. Human beings are able to join the dots in terms of being able to interpret it. I don't think the compliance teams really expected to stress test the accuracy of AI because for all these tools that have got built, the technology behind AI, I think, has already been stress tested. But it's the compliance domain knowledge that experts bring in, which is really the critical part of it. So with that, Kyle, I'm going to hand this over to you and thank the audience for a terrific set of questions. Thank you, panelists, for a great session. Clearly, fraud and corruption risk is not going anywhere. Reduced COVID travel is not taking that away. Technology is there to be leveraged. Companies have started that journey. It's a journey indeed, but those who've sort of embraced it faster are seeing the benefits, and we kind of are starting to see this overwhelming kind of traction increasing towards this whole concept of center of excellence to deal with resource challenges that dispersed geography teams otherwise deal with. Thank you so much, and back to you, Kyle.
All right, thank you, Subhashish, for a very informative session. Again, everyone, our speakers today were Subhashish Nath, Richard Massey, Anu Vij, Anna Romberg, and Jill Rennie-Stillman. And I'd like to give a special thanks to Genpact for making this webcast possible. Once again, to obtain your CPE credit for this presentation, please disable your pop-up blockers in order to access the exam. The webcast will close automatically, and the final examination will be presented in a separate window. If you have trouble viewing the CPE test or receiving the CPE certificate, please send an email to webcast@complianceweek.com. This concludes our webcast. Thank you again for joining us, and enjoy the rest of your day.